Good evening, ladies and gentlemen. It is Tuesday, the 13th of December 2022, and welcome to Hindsight, where we learn to be a better trader. We're going to take a look at what's been working for us this month and just what hasn't. I've noticed there's a clear, distinct shift in the micro-cap space as there's just been a lot less pump and dumps. Now, we're going to talk through 3 stocks that I thought had real potential and see how they flopped, and then just go over what worked intraday for us. We've got FG1 here, which is actually not too bad of a stock. It moved very late. It moved at like 11 o'clock and did a bit of a breakout to the upside. The downside of this is it has really low shares on issue, so there really wasn't an opportunity to get more than a couple of grand on this thing. And it's a really nice move when you look at it, from around 14 cents to the high of about 20.5. So percentage-wise, it's pretty significant. But really getting anything around match, around this level here, there was just no shares. It was really kind of just a terrible, terrible trader on the order book. And we'll go through the news announcements. This was about a 10 mil market cap company, roughly. And we had 12.3 meters at 16.8 grams a ton, which does include a little bit of smearing, 2 meters at 68.5. But overall, that's a pretty nice hit, particularly when a company is around that sort of 9 to 10 mil market cap range. This is actually a pretty significant hit. Now, this did end up rallying, but the opportunity to make coin on this was very slim. Unless you want to buy a stock that's sitting at like 14 cents with next to nothing on the bid and just hope someone moves it, right? Because again, the offer was also pretty thin and there was a bit of a gap there as well. So there was no real opportunity to make too much on this. So FG1, I would consider it a flop intraday in terms of trading. I mean, you can't put 5, 6K on or 10 or anything like that. Maybe there was an opportunity to put 600 to like 2K. And really the amount of money made from this, or the potential to make money on this, was very slim. So we'll move over to ERM. Now, this stock had, on the same day, this was yesterday, had real good potential. This was a 40 mil market cap company roughly. And we'll go to the announcement. 28 meters at 28 grams a ton of gold is fucking awesome. It's so good. That's a really thick hit, and it's not too smeared. I mean, it is by this 9 meters at 84 grams a ton, but that's 9 meters. That's not like a 1 meter intercept of 300 grams or something like that. That's 9 meter intercept inside this 28 meter hit. The rest of the hits, not that exciting. 21 at 1.9 and 3 at 8 grams a ton. I mean, that's not too bad, but it's a little bit thin at 3 meters. And it's I wouldn't call it shallow, but I wouldn't call it deep either. It's somewhere in between at 141 meters. Now, my expectation of this was actually that it would really move. 28 grams a ton is just sick. That's so sick. That's like more than double high-grade gold. 10 grams a ton is high-grade, and you got 28 meters of the stuff. It's a really good hit. Now, the only thing I could think of that could hinder the price action of this thing was that it was an underground mine, and I believe that they did the assays from within the mine, or they drilled through the mine, or something to that effect. So it's not a new discovery. It's kind of just drilling through old known deposits. So that's probably why it didn't react that well. And where was the opening price here? The price action was just terrible. It opened up at 8.3. Yeah, at 8.3. Just pile drove down, ended up just buying a little bit as it was coming off. I don't remember exactly where, but I thought there's absolutely no way this is just going to sit at its lows and sit lower than the day before on its share price. It seemed wild at 7.5 that it just wouldn't go. Right, here's the previous closing price was, where was it? Okay, it was like 7.4. But it's just bizarre. If you bring up the daily chart and see it a little bit cleaner, where it gapped up at 8.3, dipped right below the high of the previous day, and then it did spike up, which was quite nice to see. So it ended up taking profits as it sort of spiked up to the upside, but it was so hard to get out of. There was just one buyer here, one big buyer, just market bought a few lines, and it's just about getting the fuck out wherever possible. So I ended up getting about half out and had to close out the other half the following day. So you know, it wasn't a great trader. It was a bit weak, both on the order book and in terms of price action. I was expecting this to go because on any other day of the week, whether it was in 2021, 2020, or even pre-COVID, this would have launched. I don't know why there's a lack of interest in gold, and it seems to be the interest is lying in lithium. I mean, lithium rock chips get better fucking pushes than gold with high-grade hits. It's bizarre. So we look at KNG, and I've got a little love heart here to just show where the opening price is for this one. So 16.5 popped to 19 on, you guessed it, no volumes, and flop. Now KNG is my least favorite commodity, and that's uranium. But it was about 4 mil market cap or 5 mil market cap with about 4 mil cash. So an EV of $1 million with 16 meters at of 1400 ppm. 900 ppm, 900 ppm. So the grades here are actually not too bad. They're quite good. 16 meters at 1400 ppm is quite nice, with a peak rate of 2.9%. And I thought for sure this would rally. For sure this would rally. I mean, it's considered high grade at 0.1%, which is 1000 ppm. I think it's even 800 ppm is considered high grade. So at 1 million EV, hitting high grade with a pretty decent intercept, and mind you, there's 47 meters at 900 ppm, 31 at 900, 46 at 500, which, you know, these hits aren't as good, but these are 3 solid hits. To give you an idea, that'd be like hitting something similar in terms of lithium grades, just hitting like 1% lithium or 1.5% lithium, somewhere in that range, and just hitting tens and tens of meters of it with multiple intercepts. It's just bizarre that the price action is like this. I know uranium's kind of not hot right now, but I thought at 1 mil EV that this would definitely go. You know, conviction was pretty high on this one, but it just ended up flopping. I mean, you guys know that I hate uranium. It's such a trash commodity on the ASX. It has waves every 18 to 24 months. It just has a spike in price action. There's interest for a few weeks, and then it just disappears off the face of the earth, and then it just sort of rinse, repeat. So uranium has a interesting cycle on the ASX, but at 1 mil EV, I was expecting this to really fucking go, at, you know, just purely based on the market cap and the hits they got. Oh, I wasn't expecting like 20, 30 mil or anything like that, but certainly not fucking 1 mil EV. So yeah, it ended up closing at basically the open price and just didn't go anywhere. So if we look at that on the daily, you can see it did sweet fuck all, spiked a little bit, dumped, but all on the back of next to no volume as well. So shocking trader. But what has been working is Whitehaven Coal. Now, WHC is just such a nice trader. Coal is just in at the moment, and trading range breaks is fantastic. Now, someone asked me a few days ago, what is range breaks on Twitter? So I took a screen cap of this as it was developing. And it's, for those of you who don't know, it's just the open price and then finding out where it develops a top and a bottom. So if it just goes one direction and then it starts going the opposite direction, you've found your bottom and you found your top. Right? That's your range. And then it breaks range. Where does it come back to? It comes back to retest the range. And then it breaks range again, comes back to, you guessed it, retest the range. It doesn't always do it on the second push up, so this is actually quite nice and clean. And you can see an example here as we have the horizontal here on the third range, where it just doesn't come back, and it just kind of just grinds sideways. Sort of pumps and consolidates, and then just holds the price nice for the rest of the day. So that's just range break stuff. Really, really clean most days of the week. Obviously, it's not perfect. You can see here it sort of just doesn't do much. It's got a very big range as well. So range, it breaks to the upside. In this example here, you can see it's just not clean. So there's your range from, there's the open price, there's the bottom price, and then it sort of does a big wick, fake out. It's meant to hold this level in theory, but there's just, you know, it's very wicky on this candle for some reason, on these 3 candles, so it's not very reliable. But you can see it just about any other day. It's just find a range, and then comes back to retest, break, short at the retest, and then fail. So it's really quite nice. And today was an interesting one. The price action on coal was good overnight. I thought it was quite strong. You know, I'm just checking the spot price overnight. It was pretty green, and it just gapped up a little bit. Whitehaven coal sold off. I did make a mistake by buying the dip here. I thought it might hold the closing price, so I was getting the closing price, stopped out very soon after it broke. So just a few ticks of risk there. Serves me right for trying to bottom pick. So you know, I thought there's no way that this doesn't go green today. So it was interesting to watch it sell off. And Yal coal, and this is the daily chart for Yal, which by the way, nice breakout we can see happening. So that's beautiful. A lot of really clean horizontal targets here, here, and here. Plenty of levels to get to of interest. So anyway, on the 1 minute chart, YAL or Yan coal was quite interesting because it led the way. So we can see the sort of the break was 1020, or rather the reversal from 1027, just a big shoot to the upside, 1027 to 1029 above VWAP as well, and it kind of just launches after that as well, and really good volumes to push it to the upside. As you can see, this is the resistance here. So it hits resistance, pulls back just a little bit, barely a pullback, comes back, and you know when it's coming back to major resistance that it's just going to go right through after volumes like that. It's just a really nice push. But here at 1027 to 1029, if we look at WHC at 1026 to 1029, it didn't do much. It had a little bit of a spike in buying here, and I joined that buying momentum as well. And then of course it just pops to the upside. And we can see YAL as well here, high volumes at 1044, and then you can see that the sort of volumes flow in through here as well. So really nice, sort of using YAL as a reference point for coal as for the price action. They got similar market caps, and it was interesting just to see YAL sort of lead the direction for NHC as well. But I prefer trading Whitehaven coal. I find it's a little bit cleaner on the charts, and you can see on YAL's volumes a little bit thin as well. So I'm just not a fan of that. Like someone said on Discord, YAL, when it goes, it goes. So it's probably due to the volumes and just the thin nature of the book. I mean, I don't really watch the book or anything like that. I just don't like Yan coal at all. The Whitehaven coal, really nice. And then, of course, it just pops through to the upside and ends up retesting that horizontal as well, which is quite nice to see. Oh, sorry, that was for YAL. But anyway, it just really nice pump right above VWAP, like it was nothing. Hot knife through butter. Consolidates for a little bit, has a range, breaks through, and you can see the same thing as YAL. It hits sort of a resistance, which is the opening price here, barely a pullback, and then just goes again. Did end up closing. I did take half as it came to this horizontal here, and took out the other half as it was consolidating here. As nice as that looks, you know, that's not quite a pump consolidate. Pump consolidates on the back of news, and usually for more micros and mid caps, not for large cap stocks. So this is just what's the terminology? I don't use fancy terminology typically. Distribution, I guess you could call it. Anyway, 230 is usually where the fade is, but this one sort of started a little bit earlier at 140. Normally the fade timing is 230, but I guess it didn't continue going to the upside. So I'm not sure that 230 timing is as effective when it doesn't continuously go up. So 230 timing, if you've watched my other videos, when a stock really just rallies, and rallies. But in this case, it consolidated. But if it kept going, 230, 100% fade timing would have been really good for me. But didn't eventuate, just closed out somewhere 965, I remember, was the price, and just let it go. I was happy with a trade from effectively the bottom half and half. So really happy with that. And guys, if you've noticed a shift in the market in any way, whether it's in commodities or whether it's in small cap, large cap, and you've noticed a trend, do let me know. I'd be curious to know about it. Otherwise, guys, I'll catch you in the next videos. Cheers.